Ready? I'm playing some music.
AJ's wisdom, sobering King J. Scott's debates, always a scene. Mauricio taking leaps of faith, Kyle pretending he's got control safe. Stories fly, truth enhanced, behind each joke laughs, funny dance. Real estate legends in their prime, laughing hard, having a good old time. Raise a glass, here's to the boys. Real estate mischief making noise. AJJ, Mauricio, Kyle, podcast gold mile after mile. So here's the toast, one more cheer to all them quirks we hold so dear. From red cups to ties that bind drunk real estate guys forever wise.
Hey there, welcome to episode 90 of Drunk Real Estate. I am Kyle Wilson, Ashley Wilson's husband. And what do you think, guys? Is that going to be our new intro? Replace what we got before?
I thought that was pretty cool. So for those who are wondering, that theme song, I guess you could call it for lack of a better term, came from one of our listeners, Rob Almy, just out of the blue. Put together a theme song for the show. I guess he didn't like our intro or something, and sent that to us. And it's actually about 3 full minutes. We cut it up a little bit, but so thanks.
Is that all? Is that all AI generated?
I assume so. He indicated that it was.
So the fact that he probably uploaded a bunch of our episodes or transcripts or whatever, and then the freaking AI spits out the whole jingle, which is just crazy.
Well, Rob does a lot of AI stuff, and he sends me emails every once in a while just giving me some tips on like DRE Daily, the newsletter I do every day, and how to automate that. And so I'm thinking we might want to ask him if he wants to come on a future episode and talk a little bit about AI and how we as real estate.
Are you gonna post the full thing for us, Jay?
Yeah, I'll post in the YouTube description. I will post a link to that full audio.
Okay, because there are some pretty funny parts where like it calls out like our, how we pretend to be people and stuff. So, or we could at least transcribe it because I want it to be out there. But Jay, how's it going, man? Other than that,
going well. We're recording early today. Normally we record at like 7:30, 7 o'clock my time, and here we are at 3:30, and so you've got me drinking in the afternoon.
Yeah, you can actually see back behind me. There's light coming in through my windows. It's crazy. What are you drinking?
I just grabbed the first thing I found, which is this Lobo e Falcio. How do you pronounce that, Mauricio?
I don't know. If it's from Costco, I don't give a rat's ass.
That's not. It's Wolf and Falcon 2021 from Portugal. No idea where it's from, but it was not Costco.
Do you think I'm from Portugal that I would understand Portuguese?
Yeah, geez, Jay, they're all the same, to you.
Yeah, just you've got your white privilege. Just stay over there.
Portuguese is not the same as Spanish. It's actually beautiful. It's a language that is complex and rich.
Yes,
it is
you
very
different. It's not beautiful.
Spanish. I mean,
romantic.
Yeah, that's exactly what I'm saying.
Yes,
exactly what I'm saying.
How's it going, Mauricio?
Dude, I'm drinking. I mean, it's like just the morning just ended over here because I'm on the West Coast, so I'm drinking my little coffee.
Yeah, but isn't it your fault that we're having to record this early? So you can't really complain. Like,
it is definitely not my fault. I think it was AJ. Somebody else had a conflict schedule, a scheduling conflict. It was not me.
Well, you're the reason we have to do it.
You know what? I like that we're just throwing him under the bus, so I'm going to stick with that. I'm not going to insert whose fault it really is.
What are you drinking, Mauricio?
I'm drinking coffee. Some Nespresso.
Just coffee.
Yeah, I got stuff to do, guys. I mean, this ends at like 2:00 in the afternoon. I got work.
Oh, geez.
I gotta go coach
one of those episodes.
Real estate syndicators. They depend on me.
All right, AJ, go tell us about your caffeine and your dinosaur.
Diet Coke, Red Solo. Doesn't matter if it's early morning, afternoon, night. I'm good. I'm sticking with it, and Ernie is sticking by me.
Kyle, you drinking that nonsense thing again? The clear, whatever it's called? Yeah.
I'm just going to try and keep as much energy, even though we're so early. But yeah, it's perfect. It's just like drinking like flavored, just a little hint flavored water. Actually, you guys ever have that hint water? It's excellent. It's at Costco. By the way, Jay, you should be able to get some hint water. I love it. All right, should we get into this? I know people have time crunches, and we got a lot of cool stuff to talk about, especially Fannie and Freddie. Cool topic, right, guys? Fannie and Freddie are names most people never really even heard of until the great financial crisis in 2008. But they are hybrid public-private entities, and these government-sponsored enterprises, they're called GSEs, if you ever want to look it up, have been the cornerstone of American real estate mortgages since the Great Depression. Well, now they've been highly profitable entities for a number of years, so people are saying it's time for them to step out of under Big Brother's shadow. But many are believing it could spell disaster for the cost of real estate prices here. So, Jay, is privatizing Fannie and Freddie really a good idea?
Yeah, I think there's actually a good debate to be had here, and I'm not even sure which way I fall on this, and hopefully by the end of the episode I'll have an opinion. But let's start with a little bit of history, because I think this will be important moving forward, because we're kind of moving back to where we have been at a previous point if we privatize. So Fannie Mae was created in 1938. Freddie Mac was a couple decades later. The reason Fannie Mae was created was during the Great Depression. Basically, it was really tough to get mortgages. You couldn't get, lenders were tightening up. Nobody wanted to lend money. Home ownership rates plummeted. And so the government basically wanted to create a stable and reliable source for funding mortgages at the tail end of the Great Depression. So 1938, Fannie Mae was created. The goal was basically Fannie Mae would buy mortgages from lenders. So a lender like a Wells Fargo Bank, I don't know if they had Wells Fargo back then, but Wells Fargo Bank makes a loan. And
they came in wagons from the East Coast, and the Wells Fargo was like with horse and carriage, dude. Come on.
Thank you. Okay, good point. Yeah. So, there's an example. So Wells Fargo would originate a loan. They make a loan to a homeowner, and then Fannie Mae would come in and they would backstop that loan. They would repay Wells, so Wells could then recapitalize and go make a loan to somebody else. And this was essentially a government agency. 1968 comes along, and I think it was 1968. 1968 comes along, and the government decided, let's make Fannie Mae private. So made them a private company, listed them on the New York Stock Exchange, still regulated by HUD, but it was basically, the goal was for this organization to make money. Well, now that it was a private organization, it needed competition, because we like competition in this country, and there were no other organizations nearly the size of Fannie Mae that could compete. So the government created a second organization called Freddie Mac in somewhere around 1970, I think. And Freddie Mac was basically a brother company to Fannie Mae, with the goal of essentially being competition for Fannie Mae. So two private companies. Freddie Mac was originally owned by like a dozen banks as opposed to being listed on the stock exchange. But basically, these two companies were private companies buying up all the mortgages, or most of the mortgages in the country, so that banks could continue to lend and lend and lend.
So Jay, when you say just a curiosity here, because you said it's a private company, but we said that the government created it. So like, which one is it? Did the government create the Freddie in 1970, or is it a private company?
So the government created or originated Freddie Mac, again under the regulation of HUD, but they created it as a private company. So Congress enacted a law that put it into existence, gave it over to 12 banks that were the big 12 home lenders at the time. And those banks ran it, and it was regulated by HUD, just like Fannie Mae, but Fannie Mae was on the stock exchange and owned by everybody. But they were two private companies by 1970. And again, their job was to buy mortgages from lenders, pool those mortgages up, and then sell them off to investors as what we call mortgage-backed securities, which you may have heard that term if you were paying attention in 2008, where you basically pool lots of loans together and sell them to investors. And one of the nice things about Fannie and Freddie is it stabilizes mortgage rates, because there's less risk to the lenders. If Wells Fargo thinks they have to hold a loan for 30 years, they're going to charge a higher interest rate than if they know that they can originate a loan and then 2 weeks later or a month later sell it to Fannie, because there's no interest rate risk. They don't have to worry about rates going up and them having their money out at 3% when they could get 6% later. So it really stabilized mortgage rates. 2008 comes around, and I mentioned that Fannie Mae, Freddie Mac took all these loans and packaged them up into mortgage-backed securities, MBS. And in 2008, if you recall, we had this issue where all of these bad loans were made, all these subprime loans were made. And so all of these packages of loans, these MBS, basically became worthless. And so all the banks that had bought these MBS were screwed. They lost lots of money. The government had to bail them out. At the same time, Fannie Mae and Freddie Mac, they were doing really poorly. They couldn't, again, private companies, they couldn't support themselves. And so the government had to basically bail them out as well. And government didn't want them to go away. They wanted them to stick around because, again, they served a very important function in the housing market. So the government basically bailed them out by buying about 80% of them in terms of equity, warrants, which is just a way to make an investment in a company. But for the most part, the government owned about 80% of these two companies since 2008. The goal was always, hey, we should privatize these companies again at some point in the future. But Fannie Mae and Freddie Mac owed so much money to the government, and things were actually going pretty well the last 15, 17 years, that it hasn't been a high priority. Trump in his first term talked about doing it, but there was so much other stuff going on, it just didn't become a priority. Biden administration didn't even talk about it. And now Trump coming back into office, one of the big discussions is now the right time to take Fannie Mae and Freddie Mac private again.
But why? So my question is why? Like, why do they want to get rid of Fannie and Freddie? What's the push? Like, whenever I hear people talking about it, like in the government officials and stuff, and they say like, oh, we should do this, but I've never really heard a compelling argument for why the government should get rid of them. Like, they're a profitable company, they're doing fine. Like, why do we need to privatize them?
I could be skeptical and say the same reason that I think this administration is looking to privatize a bunch of different functions of the government. It provides tremendous financial opportunity to those people that come in and end up running the companies. Basically, you get some billionaires the opportunity to run some potentially very profitable companies. The problem is to make certain things profitable. And I'm not saying Fannie Mae or Freddie Mac is in this.
But if the government owns it, how does it give control to the billionaires then to take it?
So the government right now they own about 80%. They can sell it.
No, so you were saying to the government take it over.
Well, so then is the question that is this a cash grab? Like if they're going to sell Fannie and Freddie and they're going to make money off it and pay down our deficit? Or like,
well, here's the problem. So right now, Fannie and Freddie are still in conservatorship, which means the government's still controlling them. Fannie and Freddie control about $6.5–7 trillion in loan, 50% of all the housing debt out there. They don't have enough money on hand to run privately. Right now, they're still relying on the Fed to backstop them. So every year they need about $325 billion to run in operational cash. They've got about $125 billion on hand, which means they're about $175 billion short, which they can rely, if they have cash flow issues, on the Treasury and the Fed to basically backstop them and give them that cash. They are profitable. They make about $25 billion a year, but they don't have enough cash on hand to deal with a cash flow shortage. So the thought is, one, they could IPO. And if you IPO, you basically raise lots of capital, hundreds of billions of dollars potentially, and that could raise the capital that they need. Second issue is that, again, the Treasury owns about 80% of Fannie Mae and Freddie Mac to the tune of about $340 billion. If they were
they own the rights, so they own the rights to take over it. Correct.
They own warrants and stock. So they own some stock and they own some warrants. Warrants are basically a type of debt option. Yes. Mm-hmm. And so if they were to roll off Fannie and Freddie, basically whoever bought them, in order to make taxpayers whole, because again, they're owed money. Basically, they made a lot of loans. They made a lot of investment into Fannie and Freddie back in 2008. And the value of what they bought is about $340 billion. And so if they took them private, somebody owes the taxpayers, the Treasury, the Fed, this $340 billion that their equity and warrants are worth. And so in theory, if somebody were to take over Fannie Mae and Freddie Mac, they would owe us taxpayers $340 billion. Could the government forgive that? Sure. They could say, hey, just take it. We don't need our $340 billion. But I think it's going to be hard to argue right now to the American people.
What's their market value? You said they're making $25 billion a year. Like, what's their market value then? Like, that's...
I mean, you could capitalize that at whatever.
There's considered AAA credit rating, right? So
Well, that's the other issue. They're considered AAA credit rating because right now they are backed by the full faith and credit of the U.S. government.
right.
So if they became private, that's actually one of the issues. If they became private, now they're no longer backed by the full faith and credit of the U.S. government, and now their credit rating could drop. They become a higher risk. And so it may be harder for them to raise money. They may have to raise rates. We would likely see higher mortgage rates because, again, we don't have this.
So explain to me the argument against that, because people like there are people on both sides. I heard someone arguing the other day that it would actually be better for the mortgage industry and mortgage rates could go down. Yep. But I don't see how this doesn't lead. All roads to me leads to higher interest rates for mortgages. Yeah,
higher interest rates, likely tighter lending as well, because as a private company, again, they need to make decisions not based on what's in the best interest of Americans, which they can do if they're a government-controlled entity. The government can say, hey, even if we're making some bad decisions, even if we're making some bad loans, if we're helping out Americans, we can justify it. We're the government. We can somehow justify wasting money.
I think it's pretty hard to argue that Fannie and Freddie Mae have helped out Americans in any way, shape, or form, considering they basically were a key part of imploding our entire economy.
Well, no. So they weren't really. I mean, they didn't make loans. They guaranteed loans that other banks made.
That's the key, though. The key is that these aren't really private companies, even though they're technically private, because it's the guarantee that makes it all work. Like the Wall Street bankers, to AJ's point, if they didn't have a Freddie or Fannie that was guaranteeing those loans, they wouldn't have been able to package these, or wouldn't have wanted to package these, because they wouldn't have been able to get the right price. The fact that these are guaranteed.
So the reason why we had to have bailouts, Fannie and Freddie made it so that cancer was attached to all of them. The bankers came, and if Fannie and Freddie fell, all the banks would come down. They were like the keychain. So it's, once again, it is not even arguable. Fannie and Freddie, due to the position they were in, they literally locked up our financial system in a way that the only way we could not have our country be destroyed was to bail out all the banks, even banks that didn't want the bailouts.
They didn't make the loans, but they more or less did. Like, they gave the guidelines under what the banks should make the loans to, and like they were overseeing it. And it's literally just like it's the same thing for us for large apartments. We get Fannie and Freddie loans, and when we get a loan from Fannie and Freddie, we're not getting it from Fannie and Freddie. We get it from Arbor or from whatever these dust lenders are. But it's the same forms. It's the exact same process, and it's the exact same requirements. So you're basically, whenever someone says, what kind of loan do you have? You say Fannie or Freddie, but depending on what it is, because that's.
Yeah, but it's the same. But it's because they're guaranteeing. It's like if I said, hey, Jay, lend me money, but Warren Buffett's guaranteeing the loan. It's basically I'm relying on Warren Buffett because he's guaranteeing the loan, because I know Jay can't pay off the loan. So it's the guarantee part that's the big issue, right? And I want to go back. Well, if you want to finish that way, I want to go back to a more basic concept.
Yeah. There's one other player in this that's worth mentioning. There's an organization, a government agency called FHFA, so Federal Housing Finance Authority, and they're actually the ones that make the lending requirements. They're the ones that say you're allowed to make a loan, a conventional loan, down to this credit scored. You can make a conventional loan at this DTI. You can make a conventional loan on these types of properties. It's not Fannie Mae and Freddie Mac who make those decisions today. It's FHFA that makes those decisions. And again, because Fannie Mae, Freddie Mac are backstopped by the government, they don't have a lot of risk by saying, okay, we'll buy loans no matter how bad the loans are. We'll buy them because they know that if for some reason all hell breaks loose, hits the fan, Fed's going to step in, Treasury's going to step in, and they're going to give them the $500 billion that they need to bail them out, just like they did in 2008. So I'm not saying that Fannie Mae and Freddie Mac, I apologize, AJ, because I did say that they weren't responsible for 2008. I still contend that they didn't have the bulk of the responsibility, but you're certainly right that the banks, FHFA, Congress, who made a lot of lending laws, I mean, they were all responsible, and certainly Fannie Mae and Freddie Mac were part of that. But I wouldn't give them, personally, I wouldn't say that they're the bulk of the the issue back then. It's probably equal across all these agencies.
But then they had the trillions of dollars in mortgage-backed securities that were held. And I think that was the real leveraging point, and it connected all the other banks that they were buying from Fannie and Freddie. And so I think to the point just being is that centralized connection. So when you have governments, right, entities, what you do is it creates systematic risk lots of times because it's a centralized, non-competitive, market-driven that has an moral hazard of endlessly being backed up. So their mistakes and things that they do can be leveraged massively. Whereas the other banks individually, like they let a couple of the banks go, but they couldn't let Fannie and Freddie go because of that reason.
Yeah.
I mean, it's the bedrock of our low interest rates, right?
Well, that's my point. Because you guys made a point that I'd like to hear what the rationale is for it. But I mean, you've got to answer a fundamental question, I guess, which is, are you okay with the government or the centralized parties subsidizing interest rate? I mean, I would argue that when you say interest rates would go up, I would agree, but it's more like it's not like they would go up. They would just go to market conditions, and market conditions are higher than they are today. Like if you just let the market do its thing, interest rates would be at 8, 9, well, I don't know what they would be, 8, 9%. This is subsidizing that. And that you could argue that's a good thing, that's a bad thing. But at the end of the day, the government is subsidizing the mortgage industry. And the question you have to ask yourself, do you want to do that? So that's number one. And then my second point real quick.
I do want to be clear. They're not technically subsidizing Fannie Mae and Freddie Mac. What they are doing is they are backstopping risk.
But they're guaranteeing it. Like who's going to make nobody's going to make the loan at 5%.
Absolutely.
They didn't know for a fact that Fannie Mae was going to buy it because if we weren't sure they were going to buy it or they were going to buy it at a higher rate, then you wouldn't give the loan. The only reason they're extending the loan is because you're going to be able to sell it in the secondary market. And the investors who are buying that mortgage-backed securities know that if for whatever reason they default, the government's going to pay them. It's almost like a risk-free investment.
And I would actually argue mortgage-backed securities based off of residential mortgages are shit products without the government backing, in my opinion. But we can get back to
absolutely.
that later.
And again, I'm being a little pedantic, but I'm doing it for the listeners because I want them to understand Fannie Mae and Freddie Mac are profitable. They do run like they. It's not like it's not like the post office.
For now, when we're having interest rates that have continually been going up
and not paying back what was lent to them. So it's easy to be profitable if you give them $1 billion and they don't have to pay it back.
That's right. The problem is these quasi-governmental companies, they're private when they make profits, but when they lose, it all gets socialized. And so, yeah, it's great that you make $25 billion every year, but then if every 10 years you lose $700 billion and you have the government to bail you out, that's not a profitable company.
Well, and it's not a profitable company where it's only certain market conditions where they're going to win. Think about it this way. If your options are to buy a government bond or treasury note, let's even say 30-year, because you can get a 30-year treasury note right now. When you buy that, you know you're getting your interest rate, 4% or whatever. And for as long as you hold it, it's going to be 4%. But you have the upside. If all of a sudden interest rates go down, you could turn around and sell that, get the upside, right? But the downside, if the interest rates go up, you just hold it. If you look at these mortgage-backed securities, they technically have 30-year terms, but like what they're securitized by could end at any time. Like I can go and turn around and I could sell my house, and it's a requirement of the loan that I could just pay off the loan anytime I want, or even have to. I could refi. I could do whatever I want. I could just get out of that. So if you're buying that mortgage-backed security, you have no upside and no down, or you have no upside and all downside. Like you don't know how long your term is going to be, and you don't have the upside that if interest rates go down, it's actually going to be worse, because when interest rates go down, everyone's going to sell and get rid of those securities. So like it's a lose-lose.
In the artificial loans, or the artificial interest rates, what that does, I think every homeowner would agree at this point that holding interest rates artificially low, whether that's by the Fed or by Fannie and Freddie packaging up housing loans and not taking on any risk, has not only not helped any of us, but it has created the worst financial crisis and then led to a point where people can't even buy homes because housing prices were driven up artificially. So the reason why we had a disconnect of housing prices was largely driven because interest was free. And so all of a sudden you could pay a multiple that you could normally pay. Well, that's so artificial that it affects and makes one group of people really wealthy, while it makes others not only really poor. It creates mass barriers of entries because it's artificial. It's not real. It's not tied to like income levels. It's not tied to other things. And I think that this quasi government stuff where they're pushing the market to do things they want it to do, the implications of what we see is not, it's catastrophic on one end, but it also really, really hurts people that want to be homeowners. So although the idea is good, we're going to make it available for more homeowners, but at the same time, then what happens is prices go up. So the people that needed the interest rates can't even get them.
And the challenge is, AJ, that the system now is kind of addicted to that. So it's not as easy as saying, well, we don't
not
like
anymore.
that.
Interest rates 8%.
Let's just unwind it all and let's go back to let's just have all the pricing go back down 50% and let's go interest rates go in and whatever. That just causes so much, issues with the economy that unless you wean off of it slowly and you say, okay, this is a 20-year plan where we're slowly going to get off of this, just suddenly eliminating, for example, Fannie or Freddie, because I think that's the discussion. Is do you eliminate? It's not a discussion of whether it should be a private or government owned. It's whether you should have it or not. That's really, I think, that the main discussion. I think having it private is really, it's almost like a slap in the face, because we all know that if we have a big downturn and there's a huge economy, and even if they're private, the government will come in and bail them out. So it's really the same thing.
But if they're privatized, wouldn't that cause flates? Because what Jay was talking about, how if you're backstopping those interest rates with the government, it leads you to be able to take on more. If it's a private institution, they're going to go, we're not going to do that.
Yeah, but that was the thing, AJ, remember, because you and I are old enough to remember this stuff, but prior to 2008, there was almost like this question, will the government bail them out? If there's this financial crisis, it was like, we didn't really know, but that was priced in. It wasn't 100% sure they would, but it wasn't 100%. So it was like a 50-50, would the government step in? And we got the answer, which is they will. And so investors coming in when they're raising capital to recapitalize these companies, there's going to be a factor in there that's like, hey, if we do lose money or if we do have a downturn that usually would wipe us all out, I feel pretty decent that the government's going to come in and bail us out. Otherwise, it's just a catastrophic thing for all of them. But
here's another way to think about this. You're certainly, I think you guys are certainly right. I mean, they're always going to get bailed out. The question is a bailout in this situation that bad of an idea? If you think about it, I assume we're all in agreement that bailing out the big banks in 2008 was horrendous, both from how much it cost the government, from a capitalist standpoint, from all different standpoints. Bailing out big banks was probably not a good thing to do. Bailing out a big bank, who benefits? The big bank benefits. There are plenty of other smaller banks that are going to step in and provide the same service at pretty much substantially the same price and all that. But if Fannie Mae or Freddie Mac went out of business, not only would nobody else step in, but it doesn't just hurt Fannie Mae or Freddie Mac. It's not like it just hurts JP Morgan Chase when they go out of business. Fannie Mae and Freddie Mac going out of business, not getting bailed out, is bad for hundreds of millions of Americans who rely on them. You don't think if JP Morgan had gone under, you wouldn't have lost anything that was above your FDIC insurance back then, which was like $100,000? I mean, the government could have done something in the middle where they said, we're going to bail out the depositors without bailing out the bank. We're going to let Chase and we're going to let the shareholders lose money. We're not going to let the depositors lose money. They could have done that. They did that. Well, they did that with Silicon Valley Bank last year. It's exactly what they did. They said, we're going to bail out. I mean, there are plenty of depositors that had millions of dollars, lots of startup companies and VCs that had millions of dollars in Silicon Valley Bank. They bailed out all the depositors, but they let the shareholders go down. And that's the moral hazard, though, that we keep talking about. The moral hazard is you keep doing that, then people don't care what bank they put in. They're not going to pay any attention to whether the bank's a good bank, a bad bank, if they're conservative, if they're aggressive, because they know it doesn't matter. Like if I put money in this bank or that bank, I'm insured, I'm going to get covered, versus if you don't cover them, now you've got. I don't think it changes the fact, though, that if they were to go private, their credit rating would take a hit. Like basically, their credit rating is the exact same as the U.S. government. You saw that back in 2023. Back in 2023, there was that time where Fitch or Filch, whatever, like they downgraded the U.S. government from AAA down to AA+. And what happened?
At the exact same time, Fannie and Freddie got downgraded to the same rating. And when asked why, they literally said that the downgrade was due to the U.S. government being downgraded. So like their credit rating is literally tied to the U.S. government. So if they were to become private, they would have to separate those two, regardless of the fact that we know that they would get bailed out and their credit rating would take a hit.
What now? I still think it would affect interest rates.
Well, that I guess that's what I'm saying is like if you're having to, so they package up these mortgage-backed securities and then resell them. Like if you have a credit down rating of your product, then the price that you're going to have to give that out at goes up. And if the price goes up, they're going to have to charge higher fees. They're going to have
the cost of capital, right? That's going to increase. Because so Fannie and Freddie would have to onboard way more capital. They don't have to right now, right? And it would also have to then provide profit to shareholders. It would have to attract investors. It'd have to provide a lot more of those business functionalities, which it doesn't have to do. So the interest rates would have to rise because you also have, so anything smaller, you take 30-year, for example, like not commercial, but 30-year fixed only. It really is the 30-year mortgage it is only viable because of the U.S. government. Let's just be true. So it's not.
We're one of like 3 countries who offer it. Even Canada doesn't offer it.
So imagine your payment. Imagine your payment if you had to just get a 15-year mortgage, which is what the market may be willing to give you. Now you got to buy the house with only a 15-year. Your payment's basically almost double.
Most countries, the max is 10.
So here are 3 kind of risks that we face that we haven't gotten into that are probably worth mentioning to round out this discussion. One is if this were privatized, if you guys owned Fannie Mae Freddie Mac and your goal was to reduce risk and maximize profit, we probably all get rid of that 30-year mortgage. We probably all raise rates. We probably all make tighter lending requirements. We lend a whole lot less money, and so it's harder to get a loan, all those things. Number 2, and this is kind of in the weeds a little bit, but it's kind of important in this particular market. In the bond market, there's this thing called the to be announced, the TBA market. And TBA bond markets are basically this thing where, and I'm not that familiar with them, but they're basically where somebody says, I'm going to issue bonds at some point in the future. It might be 24 hours, might be 5 days, might be a week, whatever. I don't know exactly what those bonds are going to look like, but I want you to give me a price on those today. And this happens a lot in the mortgage market, especially with MBS, because with MBS, one package of mortgage-backed securities for houses is pretty much the same as another package of mortgage-backed securities for houses. So nobody needs to look at the package to say, this is what I'll pay for, and I'm happy to pay the same in 3 days as I am today. This is what allows us to lock rates in the mortgage industry, this TBA market. And the reason we have this TBA market is because Fannie Mae and Freddie Mac do so much volume that they can say, we're going to give you substantially the same MBS packages today, tomorrow, next month, next year, because we have so much volume that they're all statistically going to look the same. If Fannie Mae were privatized, it's very likely that whoever is running it isn't going to want to say, I'm going to lock a rate for you a week in advance or a month in advance. And now suddenly we can't lock our rates. And that changes the calculus as well, because if you can't lock rates, that changes how.
But how did it work in 2007? Were they not locking rates in 2007 when they were private?
They were still doing it.
So how were they doing it if they were
because
private?
The government was forcing them to, and maybe the government continues to force them to, and so that's possible.
We're going back to they became private in 1937, where everything was. I mean, this is literally right before it's because of the financial crisis of 2008. In 2007, or the week before the financial crisis, that's what we would be going back to.
Yeah, it'd be the same thing.
Except when they were private before 2008, nobody saw those risks. Basically, we had seen a stable housing market since 1935. And so nobody said we need to mitigate risk by not locking rates. We need to mitigate risk by not having 30-year mortgages, because what's going to happen? It's been 100 years and nothing bad is going to happen. Well, now we know something really bad can happen. And so it's going to change the way whoever's running those companies. Again, if any of the 4 of us were running it, we'd be thinking about 2008 all the time. And we'd be thinking, I don't want to get in that situation again. What do I have to do to avoid that?
But once again, though, if it's so, because I think if we can already, the fundamental category of 30-year mortgages the government can still force. So it's not like you privatize and it's gone. No, they can still do what they did prior. But I think what we're really talking about here is interest rates being really low due to the fact that they're not a private company. They have those backstops. They have everything else. The 30-year mortgages aren't going to go away. None of that's going to happen because the government would do just like they did prior to 2008. And I think my argument is that then privatization is better than having literally a mortgage industry that is artificially low and does not coincide with real market functioning risks and everything else. That doesn't make sense. And so I think you can say we did learn from 2008, but what we learned then created the worst housing environment we've ever had because we totally went the other way. So it's like we need to have 30-year mortgages, but having the government artificially keep rates down at levels that, I mean, systemically cause inflation, housing prices that are way too high, right? And on and on and on. I think it's better if it's aligned with the market.
As long as Congress passes a law at the same time that says, in the event that these guys blow up and screw up and BK, that the government's not going to step in and bail them out.
But that was the problem, is that they get away with it. Like you can then say there's no downside to me making, pushing all the way as far as I can and taking these risky loans and doing all this stuff because they know worst case scenario, they're just going to get bailed out.
No, you do exactly like Silicon Valley Bank. And once again, all banks in the United States, all the big five, they are all too big to fail. There is no way the United States government will let one of them fail. So the risk we're talking about already exists with the banks. That's already done. They are so much bigger than they were in 2008. It's crazy. So like that risk in 2008 has gone up 10x. So those banks they already have it. So privatizing, I think, like we don't hold that risk that is not already theirs.
I don't think we disagree that it wouldn't be like good just for free market reasons, but at the same time, I don't think any of us can say that it won't lead to higher interest rates. It's gonna produce a less desirable product on the free market. So less desirable means you're gonna have to it's gonna have to be a higher rate in order for someone to buy it. It's gonna have. I don't think we even talked about like insurance, like insuring those. Like it's not just one level insurance. Once you get to that big a level for these mortgage-backed securities, you got to insure the top line, and then the person who does that insurance, they get reinsurance, and then there's like all of these insurance rates to buy these are going to go up. So they're going to put a bigger spread on that.
There will be higher interest rates,
right? They're all going to lead to higher interest rates. So, like, are we willing to accept that right now in this point in time, where we already have high mortgage rates compared to the last, 20 years.
And why do we have such high interest rates and mortgage rates compared to in our lifetime? That was purely due to government intervention and holding down interest rates.
Right. But I guess why now? Like, I feel like our economy's teetering a bit. Our housing affordability is already as low as it's ever been. Like, why right now? Like, why mess with it now?
What housing may lose 40% of its value, which makes it more affordable for everybody else. Now, if you own real estate, that's not a good thing if you own real estate. But if you're trying to get real estate and you're arguing, hey, there's no affordable
how's it going to make it more affordable? Like you're assuming that maybe in the long term, if the entire housing market collapses, but in the short term, everything's going to be less affordable. You're going to have first of all, you can't just get rid of all the current Fannie and Freddie loans. They have to keep those and they have to back those, and you can't change those. So no one's going to move. Everyone's going to keep their current loans.
If you put your house up in the market for $1 million, and which is right now, let's say, and it's at a 6.5% interest rate, and now interest rates are at 9%, you're not going to be able to sell your house for $1 million. You're going to have to sell your house.
So you're not going to sell.
Well, the spread though is like 200 basis points prior to what it was, right, and then after. So you have a 200 basis spread. We've already seen that in the last 2 years.
Well, first thing that's going to happen, it's going to tank FHA loans, right? Because the moment Fannie and Freddie go private, then it's FHA's like everyone's gonna be like, I can't, like Fannie and Freddie's too expensive. I'm gonna go for an FHA. So it's gonna tank those loans because it's gonna be overwhelming how many people want to go for those. And then so like the whole thing is just gonna be like a huge cluster that's gonna lead to higher prices in the beginning. And then the only thing that's going to alleviate higher prices is, to Mauricio's, it's gonna be like a crash. So like what do we want here?
You lower interest rates. How in the world is that going to affect? Lowering interest rates won't make prices go down. They'll make prices go up.
We're not talking about lowering interest rates. We're talking about interest rates going up.
No, I know, but what he's saying is that you're like, okay, so interest rates go up, right? That's going to make it more unaffordable. No, interest rates going down will make it just as much unaffordable, because every time you go down half of percent in interest, you open up to 30,000 new buyers. We have a limited supply. We can't change the amount of houses, right? So if you lower interest rates, all these people that need houses need to get in. So, and that's kind of why I look at it and I go, well, you're affecting at a 200 basis point spread. We can't affect the supply. So affecting that demand, it's already there. We already have it. We got here because of the low artificial interest rates. It wasn't aligned. It didn't move with markets. Well, then why not go to that now? And the idea that it becomes less affordable, I actually agree with Mauricio. You're right, it does. So you have less people buying because we can only affect demand. And that is a short-term problem that everybody already has anyways.
But I guess my point is it's just going to lead to a crash, which, okay, we can argue whether or not that's a good thing, but who's going to...
How would it lead to a crash?
Just because if you take it that next step further, if you go higher, because interest rates are going to get higher, right?
Mortgage rates.
Mortgage rates are going to get higher. And even when people run to FHA, it's going to rise all the tides for higher interest rates. And then the problem is you still have all of these sitting mortgages from before that nobody's going to want to sell. Like everyone's just going to sit, and we're going to have no transactions.
That's what's happening right now.
But that's my point. It's going to get worse. We at least got an equilibrium now.
Are already down 200 basis points. So like that's what I'm saying. Like you're talking about it's not like we're going to something we haven't seen or don't know, right? If we're on a downside interest rate, so the economy's slowing down.
When was the last time we saw rates that low and then go up this high this quickly? Is the point. We're in an unprecedented time where we still have what percentage was it? 80% of people still have mortgage rates below 4%. Like it's just the higher our mortgage rates get, the more people are just going to not move, and the more it's just going to like the housing market needs to move for it all to work. Like we need people. No one's going to build anymore if there's no transactions. It's just going to get worse the higher these rates get.
But right now we are on the opposite side of high interest rates. Interest rates are coming down. So wouldn't you rather do this in a time where the overall interest rate is going down, as opposed to when it's 3% and all of a sudden your mortgage go to 5%? You kill the market.
I would say when you say going down, like that's debatable right now. We're kind of just down a little bit, up a little bit. We're kind of just hanging around. I would argue let's wait for a time where we are moving significantly down, where we can cushion that a little bit, and it's not just going to be make it all worse right now. I just don't think now's the right time. I don't disagree that it would be good long term. I just don't think now is the right time. Why are we focusing on this now? We have a system that's working. We have a system that's like no one's really complaining about, like in the sense that, yeah, they can complain about it for the wrong reasons. They can say, okay, our mortgage rates are too high, and Fannie and Freddie are the ones who do mortgage rates, but like that's not the real reason. But like no one's really complaining about how this system's working right now. Like we've got so many other issues. Let's focus on that when things are a little bit better, a little bit more stable in the housing market, and then talk about privatizing. Like when they talked about it last time, like that, to me, that was a better time to talk about it, right? When the last Trump administration, when they talked about it going up into before the pandemic, rates were relatively low. Like things were going well. We weren't talking about, okay, like our inflation being a big issue. We weren't talking about jobs being a big issue. Like to me, that was the time to talk about it. To me now, like why are we bringing this up now? No one needs to bring it up. Let's just let it be for now, and we'll revisit it when it's a better time. All right. I guess I get the last point there. That was nice. Thanks, guys.
We all fell asleep 5 minutes ago.
Did you say something, Kyle?
I usually make a point and everyone disagrees with me.
We stopped paying attention about 10 minutes ago.
Oh, come on. You had nothing to say, Jay. Just admit it. I got you once. All right. Let's talk about Department of Education. Last week, executive order was signed dismantling the Department of Education since the department has come under increasing scrutiny since our education rankings worldwide fallen significantly since COVID. Critics point out the department's allocation has increased from historically around 2% of the federal budget. Now it's up to around 4% of the federal budget in 2024 with no real results. Many argue that 90% of school funding already comes from state and local funds. So what's the point of doing this? As someone personally in our company, we use school districts as one of our top criteria for picking areas where to invest. I want to ask Mauricio, is this something that could lead to big changes, or is this just another big argument that's going to end in having little effect on anybody doing anything?
Yeah, first of all, I don't think the numbers I don't know where you got the numbers. I think the numbers now, it's about 1% of it's actually been coming down quite a bit since 2020. It peaked at like 600 billion. Now they're at about 100 billion. But this is interesting to me because I've been on both sides of this discussion. And the first time I heard about this, I think was in Trump's. It must have been during the campaign in Trump's first time around, and he was talking about potentially getting rid of the Department of Education. And I was like, that's preposterous. How do you get rid of that? That doesn't make any sense. Why are you getting rid of it? Like, education's important and all of this cool stuff. And what I didn't realize and what I started researching back then is that, USA Facts, is that you're just distracting me now and putting stuff up while I'm...
You calling me out and where I got my facts from. There you go.
And so what I didn't realize, for example, is that the Department of Education only came into an existence in 1980. It's a relatively new, I guess it's been now 40 something years, but like if you talk to your, parents, or maybe if you're a little bit younger, your grandparents, they went to school.
Kyle came into existence around 1980.
Yeah, Kyle came in existence, but like your parents or your grandparents, maybe like for me, my parents were in a different country, but my wife's Heidi's parents, they went to school like in the 1970s. There was no Department of Education, right? And so maybe you should go to your grandparents and say, hey, grandpa, like how in the world did you go to school in 1970 without a Department of Education? How did you survive? Oh my God, it must have been awful. Like what's going on?
Well, and it was kind of just under another department with Department of Health and Human Services, right? Like they just separated it.
And that's part of the funny part. I'm kind of blending my other argument, but then what I really realized, which I thought was really fascinating, is that, and I assume it's in every state, but I was going to give you the exact example of me specifically, who I live here in Southern California. So you've got the Department of Education, right, which is the federal Department of Education. I'm not quite sure exactly what they do, but there's a Department of Education, right? Then there's each state has its own Department of Education. So California, for example, has a California Department of Corporation. All right, cool. So we got the U.S. Department of Corporation, we got California. Then the county itself has a Department of Corporation. So there's an Orange County, because I live in Orange County Department of Organization. So I got the federal, I got the state, I got the county. And then
you got to slow down. You're saying Department of Corporation, Department of Organization. You're saying so many different things. Every single time. Let me just clarify. Every time he said that, he meant Department of Education.
Yes. So I've got the federal Department of Education. I've got the state California Department of Education. I've got the Orange County Department of Education. And then I've got the local districts that have their own freaking thing. In addition to the Department of Corporation, so anyway, we just have bureaucracy over bureaucracy and bureaucracy. And so you start asking yourself, like, well, why? Like, why do we have all of these different layers of bureaucracy?
To achieve all the great results that the education has done in the United States, Mauricio.
That's right. You put up, like, what have we gotten for this 40 years of an additional layer of bureaucracy? Have we really gone, oh my God, we were kind of pretty good, and now we're top of the world. We're number one in math and science and reading.
No, we got civil rights. That's what we got.
We basically got
you said that in a very dismissive way, Kyle. I think that's kind of important.
Kyle's pissed about that. He's like, if it wasn't for that, we wouldn't have to deal with civil rights.
No. I was saying it the other way because everyone's always I keep hearing this argument: Department of Education doesn't do anything. Don't do anything. Well, like we have this little thing called civil rights that are like a national program that it's kind of important.
There's no civil rights at the state level?
Not for schools.
That's not something they can do either. It doesn't exist. And also, you can't do that if you don't have the Department of Education. You cannot have civil rights.
Those are the. Those are the
I'm being
reasons.
sarcastic.
That's okay. Yeah, it's okay.
I mean, we have a lot of laws at the federal level because we don't necessarily trust states to do the right thing. I think if we go back to the Civil War, I can give you an example of
Have you ever been to Florida? Like you expect Florida to be doing the right thing? Come on.
You can't even get a DEXA scan in Florida for crying out loud.
Instead of expecting like each individual state to do good, we just said you're all going to suck together. In fact, you're going to perform so bad that you're going to have third world countries that are going to outperform you. We don't want one of you to do good.
Let's let Mauricio finish this because we're definitely not arguing that the Department of Education does a good job. We're just saying there are a few things that the Department of Education does that are kind of important.
It all kind of got blended together. Maybe just I'll put a bow on it and give you maybe the top 2 or 3 reasons that in favor of getting rid of the Department of Education, a couple of reasons why we shouldn't get rid of it. So for the first argument about getting rid of it is actually that idea that there's nothing in the U.S. Constitution, for example, which is what's supposed to be, limiting the federal government. There's nothing about schools. There's nothing about, education at all. And then the argument is like, do we really want one size fits all? I mean, do I really want the person making the decision of what my kid is going to be learning, that if I live here in Southern California versus living in Lincoln, Nebraska, which is more of a rural versus Pittsburgh versus like everybody has different needs, and to have one group of individuals or a group of people in Washington, D.C. dictating what at the local level, to me, that's one issue that gets brought up. The second is, again, this redundancy of red tape. I mean, we were doing just fine with it before the 1980s, and I don't think anybody can come and say, oh my goodness, the results have been staggeringly well. If we look at their performance over the last 40 years, that somehow our schools have gotten better. I think if you ask pretty much everybody and say, do you think schools have gotten better lately or have gotten worse? Most will argue they've either stayed the same or gone worse. And then the results are just not there. Now, the argument against that obviously is, well, first of all, they do provide some funding, right? So they've got right now their budget has been going down, by the way, since I think it peaked at like 600 and something $billion. My statistics, Kyle, which I can't throw it on his thing, but that we were at, it peaked at 600 and something $billion. 600, I forget the date, but back in 2020, and it's come all the way down to 103, which is only about 1% of the total federal budget. Most of that is student aid. So that gets distributed to, really, I'm not even sure it's K through 12. That's really more like college and stuff. About 15 billion gets to K through 12, and then 13 billion is about for special education. Yeah, the highest was 637 billion in 2022. So only about 10%, about 8 to 9% of the total budget comes from the federal government. Thank you, sir. So it has collapsed there. There's collapsing in there. But so it's not a huge percentage, but there is a significant number, right? There are billions, and for some people and for some districts, it will be tens of billions of dollars. So the question becomes, how are we going to fill that gap? I mean, if you pull this under the rug, there are some communities, some school districts, some states that are getting significant amount of federal funding. How is that going to get replaced? Is that going to now the state going to step up and raise taxes, or how are they going to get the money to fit that in? So that's one of the arguments about, like, hey, why are we getting rid of this? Or what's the plan? If we do get rid of it, what's going to happen with that funding? There's been no clarity as to what the plan would be. And then to Kyle, to your points, I know you didn't seem that interested in it, but yes, there are some federal rights, those pesky federal rights that come into play. And that's something that the federal government does enforce and protect: civil rights and equal access. But the question is, again, is there any reason why the states can't do it? There's actually a couple of states that already have proposed regulations or statute. I think Tennessee's one of them, that just don't want to take any federal funding, and they want to fill that gap at the state level, because I guess they just don't want to have that control. So anyway, lots of pros and cons. To me, just to wrap it all up, the fact that this entity didn't exist prior to 1980, and our fathers and grandfathers and grandmothers and our grandparents did just fine, if not better, coupled with the fact that we already have layer upon layer upon layer, whether it's the Department of Education or the Department of Corporations, layer upon layer upon layer, like we're only literally just getting rid of one layer, and now every state already has its own Department of Education.
Admin has outpaced students and teachers by 10x. It's crazy. It's like, why? That doesn't even make sense.
But here's the thing that I haven't heard. Like, I keep hearing we've got all these layers, and I'm also hearing that all the problems are the fault of one particular layer. Do we have any data that indicates that? Because as far as I know, the stuff that the Department of Education does isn't stuff that you would think conceptually, common sense wise. I'm not saying common sense doesn't always apply, but from a common sense standpoint, the stuff that the Department of Education does shouldn't hurt education. For example, a lot of the money that the Department of Education spends is for Title I, which is basically ensuring that there's money for poor people and that kids who wouldn't have the opportunity to get as good an education because of their financial situation can. Making sure kids actually get breakfast and lunch in schools, because we know that there's a direct correlation between being able to eat and staying alive, and also being able to eat and being able to learn efficiently. So Title I is huge. Kyle talked about
Title I does way more than that. So Title I and II, I don't mean that in a good way. Title I is literally the ability that they hold and use force to get things that they want in the school. It's become basically a batting, a bat that they use to beat over the head and say, if you don't do the things we want, we're going to smack you with Title I. So it's become this stick weapon that they use to enforce what they want over the entire school districts of the state.
And I'm open to having a discussion about these things that they want that are hurting education. But in general, and again, I'm not saying you're wrong. I'm just saying the idea, if implemented right, if it's being implemented incorrectly, obviously that's horrendously bad. But if implemented correctly, Title I has no ill effects on education, and it should only have
just the entire concept of like, we're going to give you less money and it's going to make our education in the U.S. better.
We're going to stop. Right. We're going to stop like helping poor kids that need to learn.
This is the problem. Why do you think it would do that?
Yeah, that in 1979 they were doing better from an education standpoint. In 1979, like the results have been going down.
So why would it? We act like we're going to there. First of all indicators of what we're trying to get output, all of them have gone down in the United States as far as schooling goes. Even mental health. You're talking about, I mean, we have like graduation rates. Like when you look at this and say output, okay, why do we think then taking a federal body that is forcing things down to state
level? We're talking about Title I. We're talking about giving money for poor kids.
But that's what I'm talking about. So why do we think that because that won't happen there, it won't happen at the state level? Like, I guess I don't understand why that doesn't make sense.
So I can't speak for your state, but it's not happening in my state. In my state, they've actually taken away funding for kids' breakfast and lunch.
The Fed does it.
No, there's not enough money from the Fed. So basically, they've had to cut programs here in Florida. Kids aren't eating here in Florida because all they get is the federal money because the state refuses to participate. If the federal government, I have no reason to believe that the federal government stopped giving any money, there would be zero money.
So if the Fed, though, if it's their responsibility, and I'm a state, and I say, you're the one that's supposed to provide it, that's your whole existence. Why am I now having to interject when that is the reason you exist? No, we're not going to do it. You should do your job and give us more funding. You need to provide more to us. So in that case, why isn't the Fed providing your state more funding? Because we just said that it is. You see what I'm saying? Like, it's their responsibility.
It's providing funding for specific things. And so I'm happy to argue.
Which by the way, Congress is the one who actually approves the funding for these things. So it's not like the Department of Education is just coming up with these things, paying their money. So like, even if we got rid of the Department of Education, all of these programs would still be funded.
If we want to have a discussion about whether the federal government should be spending more money to make sure kids eat, let's have that discussion, because I'll tell you what side I'm going to come down on. We should be spending as much money.
I don't think that's what AJ's saying.
No,
I guess
absolutely the state and local government should be doing.
But what if the state won't do it?
Who are you voting for over there in Florida where your state doesn't do this? Like, shouldn't you vote for people that want to do it?
The federal government's going to make decisions on my local kids and the funding that we give in our school system, everything else.
So let's go back to what Kyle was saying at the beginning of this. In the 60s, We didn't have civil rights. We didn't have integrated schools. Were the states doing it without the federal government stepping in and saying, we are going to force you to do this? No, because some states, people don't care about civil rights. Some states, people don't care about poor kids eating.
Okay, but what you're saying, though, Jay, is that we're taking away the rights, abilities, and options because you don't think that another state will do what you want. Now, once again, I'm not saying like you can enforce law and say you can't have segregation without having the federal government to say the states, you have to do this. Why do the states can only do it if the Department of Education exists is the only way we won't have segregation?
I'm saying that there are certain, let's call them inalienable rights that people have. I think segregation is one. People have the right to be integrated and not be forcibly segregated. So I have no problem with the government saying, we're going to force states to do this because it's the right thing to do. I'm going to put feeding kids and making sure that poor kids that don't have enough money to eat, I put them in the exact same category. Now, I'm not saying the government should be giving money for other things. We can talk about other things. Right now, I'm talking about Title I, which a big portion of Title I is ensuring the kids eat. And as far as I'm concerned, that's just as important as civil rights. It's just as important.
Well, but honestly, what's happening here is that like, because Trump's done this a few times, and like this is a huge, complex issue. And the right way to go through this is say, hey, obviously the Department of Education's broken. They're not doing their job the way they should be. And the proper way would be is to like go through this forensically and figure out which programs are working, which programs aren't working, which ones should get funding, where are we overspending, doing all those things. But like that would take a shit amount of time. And we don't have that time if you're just the executive branch right now. So the easier way is to just say, hey, let's break it first. And then like people are going to fight it, and then we'll figure out what's actually important on the back end. That's kind of like the MO right now. And so like to say like, yes, we're going to pick out all these things that are important for the Department of Education that like should get funded. But at the end of the day, like the things that should get funded and the things that shouldn't get funded are all mixed together right now. And they're all just under the Department of Education, and they're getting lumped together. So when someone argues one side, like AJ saying like the state should take care of this, and Jay's saying like, well, what about the funding for food? Honestly, the funding for food should come. It should probably not even be on the Department of Education. I don't understand why these school meals are under the Department of Education. Why isn't it under, the what's the other one? The Health and
Human Services.
Exactly. Why isn't it not under that service? Why aren't they the ones providing that? Why is it the Department of Education?
That's 100% reasonable discussion that we could have, but it's not layers. I mean, we're talking about one department versus another. I'm not arguing that, great, maybe it's in the wrong place, but if it's in the wrong place, let's talk about moving it, not getting rid of it.
Yeah, well, that's part of the problem is that you're getting, it's kind of like the repeal and replace thing, where it's like you're getting rid of something, but you don't have a plan in place. Like, okay, well, here's what we're getting rid of. It's going to cause some issues here and here. So we're going to put some funding and have that covered somewhere else. Or we're going to give some more funding to the states, or the state's going to have to do it. There's no plan in place. It's just right now, let's just take it out and figure it out later, right? I mean, that's a concern.
Yeah, so I think a disconnect too at the beginning with Mauricio with the how much they get for funding. I think you might have been taking out the Office of Federal Student Aid, because the Office of Federal Student Aid is student loans.
Yeah.
And that's 100. So of their 268 billion budget, 160 of that's like 60% of that is just federal.
Mine showed 68. Yeah, mine showed 68 in student aid and of the
right. So,
but in theory, that's profitable if they get paid back with interest.
In theory, but also once again, like that doesn't need to be Department of Education. Like that could be run by someone else. And then Trump already came. I think it was the last couple of days. He came out and said that Bobby Kennedy could take care of the meals if they dismantled it. So they're like, but once again, as I said, what they're doing is they're saying, hey, let's break and see what happens on the back end. And so they broke it, and everyone's like, well, what about this? What about this? What about this? And they're like, okay, they're basically outsourcing their forethought of this. They're outsourcing it to the public, saying like, okay, this is what we're doing. What are going to be the effects? And everyone's like, what about this? They're like, okay, well, here's a plan to do this. And they're making the plan. They're jumping in the water and building the ship from the water is kind of, I don't know what the analogy is there, but
building the airplane on the way down. And let me just say before we go any further, because I know I'll get mean comments about this. I am not arguing we should be keeping or not keeping the Department of Education. I don't care about titles. I don't care about agencies. I don't care about people. All I'm saying is that there are things that the Department of Education does that I think are very important for this country. And we need to ensure that those things don't fall through the cracks. And so if that is done, I don't care. Yeah, there's way too much. I agree with AJ. AJ will point out all day that there's too much bureaucracy. He's right. There's way too much bureaucracy. There's too much administrative costs, too many people. Let's get rid of that. But also at the same time, don't, to use a stupid phrase, throw out the baby with the bathwater. Don't just.
I think, and I agree 100%. And I think the reason why, to me, the states, what you had problems with as things went up to the federal level were things like after they started taking it, you have Harvard now that gets $686 million
ridiculous
from the federal government. How big is Harvard's endowment?
It's ridiculous. That's a whole different episode, or maybe we did one already.
Still, it's what we're talking about is education at the federal level. What they start doing then is they start picking, and it becomes a black box. Us down here, our taxes go into a magical thing. Now they have a department that is making decisions. They're allocating capital. There's redundancies. It is not being effective at the local level, right? And so I think these sources that I agree with Jay, we need to have them. I just think they're distributed better, needs met better at a local level, as opposed to going up. And we have this just mass waste and bureaucracy giving, hundreds and hundreds of millions of dollars to some of what are essentially the biggest hedge funds in the world. It doesn't make sense.
And Kyle, I think you saw that flash up there. I flashed I guess I was talking, the 2024 was at the 241 billion. But it sounds like the 2025 is where it got to 103. So they keep cutting. It's definitely going down in terms of their funding. So that's interesting because that's obviously been happening over the last 3 years.
So the way I look at it is here. I'm just going to pull up a map, and this is the how much each state spends on education. And so I guess my point is that it's fine for us to say like, oh, the state should take care of this, but just demographically of where people live. Like if you think about the reason I moved into my school district is because our funding per student is over $30,000 a student per year. So I know my kids are going to get a good education because they get that. But I also know if you go to the next township in the next county in the wrong direction, that it's half of that. So how are you saying that kids are good? And the problem is that they can only collect so much from their demographics, and in order to facilitate that, I think I saw a stat where there's a county in Detroit that they get half of their funding from the federal level, half of it. And so if you look at this map, you can look. So like New York, Pennsylvania, like New York, they get $27,000 per pupil for public schools.
But Kyle, you're making a big assumption. I want to challenge that and I don't have anything specifically, but you're making the assumption that more money equals better education. And I don't know if that's true or not. I don't think that's true
okay.
At all.
That is an assumption. But if you want to look at the difference between AJ over here in Idaho, where he's getting $9,000 per.
But if he's getting better results and he's getting a better education, who cares?
So, and two, I also want to challenge that. I know that's not true because in our state, that's not actually how it works. I don't know what they're bringing in. I've owned a school. We allocated $8,000 in a private school per student, and that was half of the state's allocation. And we got double the results with still 50 teachers. We had hundreds of students. We did way more, obviously extracurricular. They did all stuff way more private school. They had advanced. They were almost 2 grades at advanced at half of what the public school system provides, and their results were not even close to being met. In Seattle this year, enrollments of white and Asians were down 50%. Whites and Asians, because they were moving them out to private schools. Private schools are exploding across the United States, right? So what's happening is our public school system is really flawed and broken. And it is not being handled on a local level. And we're trying to make changes locally, but you have no impact and no effect. You just can't do it. And it's a big problem. And I agree. I don't think cost equals results because I've seen it. I've done it. And
but there's also a base level of requirements. So like I'll throw one more up, and this is what I was referring to with Detroit. Like there are just areas where, like, think about it, there are certain areas where if you're below the poverty level for the area, like you don't pay federal taxes, you don't pay taxes in general. If your income level is a certain level, how are they going to fund their schools? Like their township, their county isn't going to fund their schools, and therefore the state, it would be on the state to make that up, and the state currently relies on federal funding to make up for these underprivileged, low-income areas in order to do this. So what we would be taking away originally would be all of these basically subsidies for lower income and marginalized and these areas that need those effects. Is there a better way to do this where the federal funding is maybe less targeted and just given to the states in order for them to, distribute it as they see fit? Maybe. But at the same time, just getting rid of this, like if you look, like Detroit, Michigan has 48% of their school funding from federal funds. So like what's going to happen to Detroit if all of a sudden this is gone? It's not something you could just get rid of and not find a solution for.
Their scores will double? Is that what's going to happen?
I think they're the worst performing district in the nation too.
And I guess the final point on this too is like, can this even happen? Like, is this, to me, it's just another thing. As I said, I think this is just not necessarily a negotiation tactic, but more the lines of like, hey, this is problems. And it's kind of been Trump's MO. If there's a problem, I'm just going to take the extreme. It's almost like when you're negotiating, you take the extreme anchor and then so that you can work your way down from there. So
and we didn't really talk about that, but I haven't looked it up, but I can't imagine he has you mentioned something at the beginning, like he just wrote an executive order and got rid of the department. I don't think it works that way. I think it's got to be a congressional. No. He can do an executive order to study the impact of the getting rid of the education, but he can't unilaterally sign an executive order and get rid of anything.
Sort of. He cannot disband the agency because the agency was created through federal law, so only Congress can get rid of the agency. But what he can do is he can basically say exactly what AJ and I were discussing earlier. He can say, so we're going to move this budget from the Department of Education to Health and Human Services. We're going to move this one over to the Department of Justice. We can move loans over to whoever the loans move over to. And basically, at the end of the day, the Department of Education has a budget of zero as opposed to 600 billion. The agency still exists, but it's not being funded because all that money is moved other places. Now, he can't say, I'm going to just cut this program. I'm going to stop funding this. I'm going to stop funding that. But he can move it over to another agency. If he moves it, for example, Title I over to Health and Human Services, what's his face, RFK, can say, well, I am the head of this agency. I choose to defund it. And so he can say to Congress, next year, I don't want any money for this. And so now that's how Trump potentially saves money without having to force Congress to do anything.
So to wrap this up, are we, like, as investors, as I said, we take it really seriously, our school districts, like where we invest, like school districts. Is this something we're going to see any changes? So like, should I stop looking at any areas? Should I start looking at federal funding for school districts as an indication?
No, okay, only if you believe that more or less federal funding will affect the quality of the schools, right? Because that's the assumption you're making, right? So if it's more about the quality, people are moving to those school districts because they have great schools, right? If the school itself is great, irregardless of the funding. So you're making an assumption. I'm not saying it probably.
I mean, the only reason I'm making that assumption is I send my kids to, which is #1 elementary school in the state, and they're also the highest funded. So yes, there's not always going to be a correlation, but there will be some correlation, in my opinion.
We literally got an email 10 minutes before this podcast started. My wife showed it to me as I was getting ready for the podcast that Florida state legislature is proposing significant budget cuts around education. and both of my kids are in an advanced academic program called the International Baccalaureate, the IB program, that could get cut at their school. And literally, if those programs get cut, we'll leave the state, because that's, for us, that's how important education is for the kids. And so I think this could be interesting if we start seeing major cuts, if it's going to impact people moving to different states for educational purposes.
As they should.
Yeah.
As they should.
Yeah.
Absolutely.
So I guess don't freak out as of now. The thing is the too long didn't read. Good. Ready to move on to a top 10?
How about top 5?
Can we skip?
It's already 3 o'clock.
Can we skip the top 10, or do you have a good one?
Let's do a top 3. I'm negotiating. Go ahead. What's your counter?
It's a fast top 10. I thought it was.
Come back to the top 7.
We were talking about how Fannie Mae might get downgraded as far as their ratings. And so I thought it might be a little bit of it would be nice to see what other companies you could invest in or get that have higher actual ratings than Fannie Mae, or even similar ratings than Fannie Mae. I thought
okay,
that would be
I'll go up to top 4. You come down to top 6. We'll agree at top 5.
I'm tired of this, man. I'm out of here. I'm not going to listen to your top 10 one more time. I'm absolutely done with this. They're lame. I boycott your top 10.
Make sure you upload before you leave.
I'm out.
Wait, is he actually leaving? That would be kind of funny. All right. This is good. I'll do the top 5 companies by S&P credit rating. So actually, it's one of those things where the U.S. government and Fannie Mae currently only have AA plus. So back in 2023, they got downgraded from AAA to AA plus. So there are right now 2 companies with higher credit ratings than the U.S. government and Fannie Mae. Any guesses on anyone?
2 companies, higher credit ratings.
I wouldn't have guessed, so I'm not going to make you guess if you didn't. Microsoft and Johnson & Johnson both have AAA credit ratings. So theoretically, if you were to get corporate bonds from those 2 companies, they would be higher credit ratings and safer than Fannie Mae. And as I said, Fannie Mae, AA plus, they're in 3rd place. Apple, also AA plus. Alphabet, also AA plus. And then you have a bunch of AA's where you're talking about Amazon, Berkshire Hathaway, Walmart, Accenture, Exxon, those people. So anyway, I just thought it was interesting that there are companies that are higher credit rating than the U.S. government. Jay, you got any hypotheticals for us?
$1 million a year.
Okay.
But you can only drink water.
Oh.
$1 million a year.
Nope, not enough.
Can I turn it off?
I see. I knew I was going to have to go 2 different ones with you and AJ, because I knew AJ was going to say no really quickly. I figured this was going to be a good one for you, because
can I turn it off? Can I do it for a year?
When you stop, you're done.
So that's what I mean. So I could just do 1 year, take $1 million, and then
Yep.
Yeah, I think I would do that. My wife's been trying to say we got to drink less anyway, so I would give it a year, try it out, see if my life gets better, and if it doesn't, take my $1 million and then go back to the way it was.
There you go.
I would suspect it wouldn't get better. It would get significantly worse.
The only thing I drink is basically water and wine, and so yeah, I think I could easily do that.
Yeah, well, water and wine. That second one's a big one there, Jay. You got to take that into consideration. So, fun fact: Mauricio did leave, so that's interesting. He's gone. So, when we're moving on to plugs, there's no plug for Mauricio. We'll start with Jay. What do you got to plug?
I don't really. What do I have? I don't have anything. AJ, what do you have? I'll let AJ go first.
I'm sticking with the one I've been doing more often. I'm not talking YouTube. That's been the last 2. What I'm doing the DRE daily. So I've been plugging that over the last little while. You guys check it out. Make sure you guys are on it. It's awesome. It just emails to you every day, and you get to see the news articles. You get to see a description under it. It's super easy and very, very informative.
You could go through most of it in under a minute, and you get everything you need to know for the day. It's
exactly. Awesome. And it's really keeping up to speed.
I like to say, basically, it's the information you need to sound smart at parties.
Yeah.
Yeah, exactly.
Yeah.
And even if you read every single word, the whole thing, it's still under 3 minutes. So
it's really good.
It's great.
I was just going to plug whatever AJ did, but he did DRE Daily. I'll do AJ's YouTube channel. Actually, I plugged it on my Facebook the other day, along with Mauricio's email.
Yeah, AJ, you had like a pretty viral one the other day, right?
Yeah, it's been going.
How many
crazy.
views did you get on that one?
I don't know. The first week we had one that was.
He's had a couple 9-figure ones.
Yeah.
Yeah, it was like a couple. I thought I saw like 200,000 or something. That's crazy, man. Congrats on that. It was just your face. It was it.
I know. I like. Why would people? It maybe something must have been broken on YouTube. I'm not sure.
Yeah, you didn't even have like Elon Musk on talking to you with or anything. It was just you. So that's congrats on that. Yeah, so go check out AJ. See why he got 200,000 likes.
Nobody's going to comment on my haircut.
I got a haircut too, Jay. So no,
I couldn't tell you were wearing a hat.
Geez, we're supposed to call it like what is this? I feel like you're like I got to pay attention when you got haircuts now, so I make sure when you get home, be like,
I'm just treating you the way my wife treats me.
Nice, honey. Looks great, honey.
If I have to do it with my wife, I'll make you do it with me.
All right, I'm gonna plug my wife. Actually, no, I'm not gonna plug my wife. I'm gonna plug Conference Connect. Just launched ticket sales. So if you're an event organizer, you could have posted your event on the site and get all those benefits, but now you could sell tickets too.
I just sold tickets. I saw
AJ selling tickets on Conference Connect.
There we go.
Anybody that sells any tickets on Conference Connect is going to get a drunk real estate mug. So if you have an event, if you have a conference or an event.
Jay, did they start selling drunk real estate mugs at Costco? Because the amount of times you throw out that people can get drunk real estate mugs, they got to be a Costco buy for you now.
They don't. My wife has a hookup.
By the way, I didn't even know until I tried it today. Costco delivers. Awesome.
Through Instacart or themselves?
I didn't know that.
Through Instacart.
Oh, yeah. I mean, I know they marked it up, and I had to, tip the delivery driver $15 or whatever. But like, still, it's Costco these days can be a nightmare. Like just getting in the parking lot. You could 5 minutes just sitting in the parking lot waiting for a spot.
Next week, I'll tell you what's going on at my Costco. It's a crazy story.
All right, cool. That's all I got. Episode 90. We're getting close to 100, boys. Got to figure that out. What we're doing.
There.
Any suggestions? Something cool for us to do episode 100. It's got to be epic. So throw that down in the comments. Mauricio, any thoughts?
Out.
No, nothing from Mauricio.
Okay.
All right. Well, at least you two. I will see you next Thursday.
See you guys.
Bye.